But lots to talk about when it comes to the primary markets as well. We have the upcoming rail IPOs, IRCTC and IFRC. I want to talk a little bit about the action over there and what the corporate governance lapses are doing to the space. Let's get on board then Pranav Haldea, Managing Director, Prime Database, who now joins in to talk about that and lots more. Good to have you on board. Pranav, to begin with, over 70 companies, including SMEs, they've received clearances for the IPO. But given the current mood in the market, it seems like primary market activity, which was earlier expected to pick up, is going to get a bit pushed back. So how are you assessing the situation in light of this?
Well, you're absolutely right. The expectation was that given the historical mandate which was delivered in the elections this year, you would see the entire pipeline of companies which have already received SEBI approval or which have also filed with SEBI for approval getting launched in the market. But of course, over the last 2-3 months, because of global and local factors, you've seen a significant correction in the markets, especially in the small and mid-cap space, which is where a bunch of these new listings also would eventually belong. And which is where you've then seen a slowdown, in the activity. So you've hardly seen any new issues getting launched. Even going forward, I do not expect that the primary market would, see a revival in the short term. As we all know, primary markets traditionally follow the secondary markets. So till the time you don't see a bit of bullishness coming in the secondary market, a bit of stability coming in the secondary market, you would not see too much activity on the primary market front as well.
But among the DRHPs which have been filed, Pranav, which ones are more eagerly awaited based on the size and the nature of the business in the coming months, you think?
I'm sorry, I didn't catch that.
No, I just wanted to know, where is the market excited about which of the DRHPs which have been recently filed?
Well, you are seeing filings, you've just seen CAMS also filing their offer document. So, companies which are eager to raise money from the markets, or companies where you have existing investors, private equity investors who are looking for an exit, are still, continuing with the filings right now, in the hope that when the market does revive, they are able, they are in a position that they can launch their IPO immediately. Because as we know, the entire process from filing to launch can take 6 to 7 months. So companies which are eager to tap the primary market are, doing the filings right now, so that, as and when the market does revive, they are in a position to launch immediately.
Fair enough. Let's talk in particular then about some of the rail IPOs as well. After we saw RITES as well as RVNL, you've got IRCTC as well as IRFC there in the coming months. One of them did see an unsuccessful attempt earlier. Do you think that investor demand is going to continue to be dull? Can they do better than some of the previous rail listings, according to you?
Well, sure. With public sector enterprises, not just belong to the rail sector, but even other profit-making CPSEs which are there, there is really no concern in terms of, the quality of the promoter or quality of the management. These entities have, been running for several years, in a lot of cases as virtual monopolies in the space that they operate in. So, as far as the quality of the issuer is concerned, I don't see any concern on that front. The other aspect, of course, then is the pricing. And there, given the weakness in the market, I would expect that the government would sort of, make the pricing attractive, so that, one is able to get the desired institutional and retail response.
Fair enough. Now, if we look at NBFCs, the funding from banks has not eased much, since only some of them have been able to raise funds comfortably from NCDs, and the disbursements from NBFCs as well has come to a bit of a crawl. Which, according to you, are the NBFCs that are seeing the most pain, despite, the attempts and the recent measures that have been taken by the government?
Well, without taking any names, broadly what you're seeing in the NBFC sector is a big risk off, a big capital aversion as well, risk aversion as well. Let's be very clear that NBFCs come to the public issue market only as a last resort, and they would ideally like to raise money through the private placement route, wherein your banks and mutual funds have been the traditional investors, and they launch retail NCDs only as a last resort, because the process is longer, the coupon that you have to pay is higher, there are regulatory documents which have to be filed as well. So you are seeing that NBFCs are not being able to raise money through the private placement market, and which is why they are coming out with retail NCDs that which too are actually not being fully subscribed. We were just looking at our data, and in the last 1 year, out of all the NCDs which have been launched, just 4 have managed to get a complete subscription. So across the board, right from the ILFS crisis last year, you are seeing a huge risk aversion. It's also got to do with the fact that you've seen AAA rated issuers defaulting on payments. So the system is a bit shaken right now, but I do expect that with the measures which the government is taking in terms of capital infusion to the banks, you would start seeing some pickup in this space as well, especially as far as the blue chip NBFCs are concerned. They would be able to again raise capital through the NCD route.
Good to chat with you. Thank you so much, Pranav, for taking the time out and speaking with us today.